namanya, the name is double tax agreement. Alright, it's an agreement between two countries. So Malaysia so far we have 77 treaty arrangement. Ni tahun bila pun itu ni? Tak tahu. As of okay lah tu, 2021. Right? How many countries in the world? Wow, good. Right? About that lah. So about 50% of the countries in the world, we have an agreement. Right? So we have signed an agreement with 77 countries because it's a treaty arrangement. Right? 132 of the Act delegates Minister of Finance the duties to enter into such agreement with the objective to relieve double taxation. What do you mean by double taxation? Is that tax on the same income twice. Double tax. Assuming that I have received an income, assuming that, let's say, is to make it clearer, because remember that in Malaysia, if you receive income from overseas, the income is exempted. Then how could we have double tax income? Alright, we only refer this when we are talking about income received by visa. Right? Banking, insurance, shipping, and airlines. If it's not visa, the foreign source income is exempted. So there's no issue of double taxation. You don't have to pay tax on the income in Malaysia. You may have to pay tax in other countries on that income in that country, but when you receive that in Malaysia, you don't have to pay tax in Malaysia. Because why? Foreign source income is exempted from YA 2004. By talking about visa, alright, this industry income is on worldwide basis. Wherever the income is derived, as long as you're a Malaysian company, income will be taxed in Malaysia. Right? Is that clear? Right. So let's say that it's a shipping company. Right? So whenever you go ship to Singapore, right? When you ship in Singapore, you have that business as a business, we call it as a business. Not as dia tak panggil business existence, business presence in Singapore, you may have to pay tax in Singapore, right? On the same income, because whatever income that you derive in Singapore, you have to pay to Singapore, because to that the income is derived in Singapore, so you have to pay tax to the Singapore. But the same income you have to pay Malaysia, because why? Malaysia say wherever income you derive, you have to pay to Malaysia. So for the same income you have to pay to Singapore, you also have to pay to Malaysia. So that's why Malaysia and Singapore go into an agreement saying that, okay, in order to relieve, not to remove, to relieve. Relieve, it means that it could be zeroized, it could be minimized. Most of the time it's minimized only lah. Yeah? Relieve means that to reduce, right? The double tax means that, okay, let's go into an agreement and we agree on how we can reduce the tax burden on the taxpayer. Agree? Okay. Similarly, for example, if you receive royalty income or that, for all these things, alright, how can we reduce the tax liability or reduce your double taxation? Understand the concept? So if you say that, hey, how can I be taxed? Remember, it's visa. It's always banking, insurance, shipping, and airlines. Other types of income is exempted. Okay. Alright, so the objective is, of course, the treaty agreement aims to alleviate either wholly or partially. So alleviate means that to remove or to reduce, yeah, the burden of tax on the same income derived by the taxpayer. Other objectives will include to facilitate world trade, promote technology transfer, prevention of tax avoidance, and that 1.3. Tiga je. Alright? And of course, these are the objectives lah. Okay. Alright, so what is the double tax relief? So what are these relief that we are talking about? Alright? So the relief, there are three types of relief available. Right? So we call it as a method, we call it as a three ways that you can actually agree on how we can renew the tax. Number one is that we call it as a tax exemption in the country of origin on income arising therefrom to a resident of other country. A tax credit against a person tax in his home country of residence for tax suffered on that income in the other country. Or number three is that tax deduction against total income in the home country. So three methods, one is tax exemption, tax credit, and tax deduction. It sounds similar, but it's a different treatment. Right? So you know that, okay, which one is it? That depends on agreement, whether the country agreed on A, B, or C. Alright, so let's look at the example here. Chuan Korhan is a resident in Malaysia for tax purpose, operates banking business. You see? Example must be visa. Banking business in Malaysia, annual profit of 100,000. The company is planning to establish a branch of its business in one of the three countries, Nirvana, Paradise, or Heaven. An annual profit of 80,000 is projected for the proposed branch, and all available profit will be remitted into Malaysia. Right? So now you say that, okay, I have Malaysian income and we also have foreign income. But because it's a banking, so the foreign income will also be taxed. So the rate of tax in Nirvana is 20%. Similarly in Paradise and Heaven, no different. But alright, and then we have double tax agreement with Nirvana. We also have agreement with Paradise and Heaven. But the method of eliminating double tax is different. The first one applies tax exemption. The other one tax deduction, tax credit, and finally tax deduction. Right? And advise in which country the company should locate its branch in order to minimize its overall tax liability. Show all relevant calculation to support your advice. So now you have the three methods, then you have to show which one is the best for the company. Should they invest in Nirvana, Paradise, or Heaven? Because how? Based on your tax computation, which one has the least tax exposure? So this thing is also similar when you want to invest in other country. Number one, most of the time, of course, there are many factors that you want to decide. Alright, many factors that you have to consider before you decide which country you want to invest in. But one of the factors is of course tax. Because when you want to bring back your profit, alright, kita panggil profit shifting. Alright, then you have to decide which one have the least tax exposure. Because you want to bring back the most, right, to the company, right? But which one actually you can arrange so that you can maximize everything that you have, right? So the example here is that how are you going to apply full exemption, full credit, and full deduction? So this example is, I think that is very clear, right? You see that if you have in Nirvana, Nirvana is a full exemption. So how do you compute full exemption? Remember, you have a Malaysian income of 100,000, foreign source income 80,000. And remember, because it's a visa, so all income is aggregated. So total income is 180,000, both from Malaysia and foreign. Less, in this case, it says that because it's full exemption. So when it says full exemption, it says that whatever foreign source income will be full exempted in Malaysia. That's what we call it, right? So if full exemption from 180, you minus 80,000 because the foreign income is now exempted. But you must first show total income, right? And then exempted 80,000. So the balance 100,000 is your chargeable income. So chargeable income, this one is chargeable income in Malaysia, right? So you have to pay tax rate of 24%. So that's the income that you pay in Malaysia, 24,000. But remember the 80,000 income in Nirvana, you have to pay tax 20% in Nirvana. Betul? So you have to pay 20 times by 80, 16,000 you pay in Nirvana. So when you want to consider, you have to consider both lah. Tax in Malaysia 24,000, tax in Nirvana 16,000, total tax you have to pay is 40,000. That 40,000 is what we call tax exposure. Right? So that is the, if you were to open in Nirvana, your tax exposure is 40,000. But if you were to open in Paradise, Paradise gives you full tax credit. So what happens is a tax credit. Malaysian income 180,000 foreign, so total masih 180,000. It's the same. Yeah, in Malaysia you have to pay tax 24% on 180,000, which is more lah. Tadi you bayar 24% on 100,000, but now you have to pay 24% on 180,000, so total tax is 43,200. But now you apply tax credit. Bila tax credit, the computation is that you are going to use a bilateral credit. There are two ways of credit, bilateral or unilateral. When you apply bilateral, when you have double tax agreement with the other country, you use bilateral. When there is no agreement, but the country say use tax credit, then you use unilateral. Is that clear? So bilateral, later in the textbook, it shows you how to do the bilateral and unilateral more clearly lah. Right? The bilateral says that computation is that you are given a deduction on the lower of. So from the income tax 24%, you can claim a deduction, a tax credit. Right? So we how to compute the lower of foreign tax? How much is your foreign tax? 16,000. But you want to compute how much is your Malaysian tax on foreign income. In other words, foreign income 80,000. If you want to pay tax in Malaysia on the foreign income, 80,000 times by 24%, right? Or other words, 80 over 180 is the total income times by 43,200. Kalau I just buat apa? Foreign income berapa? 80,000 times 24%. Berapa dapat? Bawah. Sama kan? Right? It's the same, 19,200. So the second part, the Malaysian tax on foreign income, Malaysian tax berapa? 24%. Foreign income how much? 80,000. So 80,000 times by 24%, you dapat 19,200. But here it shows that what is your foreign income? 80,000. Total income 180,000 times by the tax that you have to pay 43,200. In our other words, from Malaysian tax to 43,200, how much is tax on the foreign income punya part? It's the same. You have to understand the formula. Right? Jangan simply hafal je. You have to understand the formula is actually tax on the Malaysian tax on the foreign income. So 19,200, but the foreign tax itself is 16,000. So the tax credit is the lower of. So in this case, the lower is 16,000, so the amount is given as a credit. Credit, because the tax credit is a tax deduction. Right? So given as a credit, so whatever 43,200 minus 16,000, then Malaysian tax that you have to pay is only 27,200. Right? Plus, in the foreign country, you have to pay 20% tax, similarly 16,000. So total tax exposure is 43,200. Which one is better? Paradise or Nirvana? Nirvana. Right? Because what? Nirvana will give full exemption. No, most of the time full exemption is always the best. But you also want to look at how is that full deduction. If it's in heaven, alright, the full deduction, total income 180 minus, dia terus bagi minus je. Deduction for foreign tax which is 16,000. So from 180,000 minus 16,000, the balance times by 24%. So you see that 24% on that is 100. How much is that? 39,360. That is 24% on 160, 4,000. So tax deduction is the least favorable method lah. Because why? The exposure is the highest, 53,000. You're talking about income of 100,000, not income of millions. It makes a lot of difference. Yeah. So that's why when you want to choose, alright, you want to consider where to invest, you have to look at under double tax agreement, what kind of tax relief given in that country? Right, Malaysia and that country, which one are we all going to apply? Right, so there's a difference between tax credit, tax exemption, and tax deduction. Right, so you should be able to explain that. Right, and then given sometimes the computation is not that direct. Right, I can give you income from Malaysia, income from other countries, tax that you have paid in other countries. I have an example of that, right? Maybe I have not given that kind of same question before, but it's just similar computation, right? You have a big income in Malaysia, you also income in foreign, but because all this while what you do is that whenever you have foreign income, exempted. But in this case, we're talking about banking, right? You have foreign income, so apply tax credit, right? Then student macam tak tahu nak buat apa, right? But it's okay. Okay, so that's the method lah. So how to seek 3P protection? We call it a 3P protection lah, right? So you have to check lah which entities that you're going to do, what are the tax coverage and the territories, right? Okay. Where the developing country have DTA with developed countries, benefit can be derived where DTA provide for a reduced rate. So normally, for example, the withholding tax is 10%, then under DTA maybe 8%, maybe 5%. So normally it's the lower rate. And talking about tax law, right? Tax law is a domestic law. When I say it's a domestic law, it means that Malaysian income tax will only apply the rules in Malaysia. Australia will have their own Australia income tax rules, right? So rules in Malaysia and rules in Australia is not the same. Alright, so that's why you need a double tax agreement to agree on certain things so that whenever there's a dispute, you have something to refer to. So again, when I saw the double tax agreement is an international agreement. So whenever there's a dispute, you have to refer to double tax agreement. You don't refer to your local tax. Yeah, so, but provided that you have that agreement, right? And the agreement is available. Yeah. Time, okay, that's it. Next class, I will continue your permanent establishment. Yeah. So I think that's all for today. I hope that you have learned something today. And don't forget, copies will be covered in your final exam. And your final exam is a closed book examination. Start doing your notes because you can only use notes before the exam. During the exam, you can no longer use the notes.